at 0.6%. They beat expectations and came back at 1.3%. Our only real news event that we have here today is a crude oil inventory report. What you'll notice about the Fed Fund futures from the right around the pre-market time frame until now is that we've risen to 36.7% for the probability for that September rate cut in 2027. Now, the crude oil chart, and this might be the most important chart in our markets right now, is the combination of crude oil and Brent. And it's such a fascinating moment in time and price and in history, because the crude oil WTI, West Texas, is in a series of short setups. And then there's the Brent price, which is in a series of longs. And we have not broken the pullbacks from our lows on March 10th to our most recent highs. Now, in the intraday timeframes, you can see them having the same setups. And they both ran into variations of shorts. And then from yesterday's highs to lows, they're both inside of resistance levels. You can see that when I switch back and forth here. But the difference is that March 10th lows to highs did not break on Brent. And as we move forward here into our crude oil inventory report, the big, and I think that you can make this case, we're wedged in on the VIX, we're wedged in on the indices after this massive rally that we had, this short covering rally earlier this week, that the crude oil price, not directly, but indirectly, has this effect on the indices. The mechanism is when crude oil goes down, the Fed's rate cut gets pulled into the future, and then the markets have less fear and then they rally. And if crude oil rises, then the rate cut is pushed further out into the future and there's more fear and the indices fall. And in their current setups, they are both in the intraday timeframes falling from a Tuesday's highs to lows. And what's fascinating about that is that when you're looking at this from the perspective of the VIX and the indices, that we have very similar setups inversely to this when we're thinking about the VIX's short setup. And our line in the sand on the VIX, let's go to the VIX here. Our line in the sand up here on the VIX is at 25.85. And actually everything below that level, you could make a case is bullish for the indices. We've been in that environment here. And we were even speculating as we were going into our Monday afternoon that the indices could break their long setups, which they did. They could even break their long setups. And if the VIX was below that 25.85, that they would still have the potential of rallying much farther, have a much larger rally into resistance, even despite those longs being broken. And so that's what is creating the bottom of this range on the indices. What's creating the top of the range? What's creating the top of the range is the VIX's long. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.